wanted to make sure, y'all. I'm sorry. So again, like and subscribe to the channel. We about to show y'all what it do. Now, I have a personal belief that stock market is bearish. I'm not pushing no fear. I just want to show you guys what I see. You can check back about 9 months ago on my previous videos that was posted 9 months ago. What 3 stocks to trade. I showed you guys Hood, SMCI, and Coin. They all did major numbers. All right, so forget that. We're going to talk about why we think that we're heading to like a major recession. I don't think it's just bearish. I think we see some similarities from 2006, 2007 that could be possibly representing themselves. Not to mention, we had a lot of issues in our economy with the government closing down for the longest time in history. I know that caused a major effect. The feds are on pause on interest rates. They don't even know what's going on. Inflation could come back again. We're at the highest debt ever in the whole world, over $38 trillion. And our deficit might even get bigger next year with this bill they just released. So the big beautiful bill might send us in a big beautiful reset. I don't know. I'm just hypothetically assuming. But I'm going to tell you one thing. These charts tell me everything. So we're going to dive right into it. Make sure you like and subscribe. Again, we here. Daily, weekly. We're going to show y'all what it do. We got the proof in the pudding. You can go back to the videos and look at today's market. We are around. So we got the SPY pulled up right now. This is a 1 hour chart. I previously marked some levels already. I personally trade off of a value system. So this is my daily value, this red line. And we look for trades around that area. All right. So I typically would try to look for, if I am bearish on this, but I would look for some type of bearish move above this value or at value. But I would typically like at this candle range right here. I would typically like to catch it at this range. We can still fail right at value as well. But I'm going to tell you why I think this is bearish. We're going to look at history right quick. Let's go to a daily chart. And I want to point out 2 things. All right, we're going to point out the second thing later. But let's point out the first thing. Let's scroll all the way back to 2006, 2007, before we had the crash. Okay, you can see that long crash. That was, whew, that lasted some time. As you can see, I had it marked. So what I did was I went to back at the time, and I looked at the ultimate highs. Because at the time, keep this in mind, this is very important. At the time, the stock market was at its all-time highs, okay? This was an all-time high at the time. It even cracked up there. But like I mentioned earlier, I trade off of a value system. So this is what I see. And this is 2007, 2008, okay? Market to show. Right there. So this is when it started, the accumulation factor. Now we got videos on how we look at this area and how banks manipulate the market, but that's another situation. We're going to just talk about similarities in this market. Okay, back here in 2007, you had your first signal of what could have been a downtrend coming. You had a nice second here. Trying to find a tool. You had a nice candle right here. Let's zoom in. It never really got a confirmation, but you see this doji that's hanging up top, right here. Well, the next candle was green, and it really didn't give us a full reversal signal. So what price did was correct back below value. Let's label this too, because I don't want you guys to lose track. I know where value is. And I'm going to put value on the daily and mark it red. So this is what happened back, 2007. Got our first signal, but it didn't confirm. So it gave us a nice correction back below value. Okay. This is when the recession happened, in 2008. So let's drag this over here. I want to take this circle and drag it over here. Now we're going to see what we have. Now you got this uptrend above value, right? Above value. It came down back to value. Now typically, remember, we are at all-time highs at this time. If you wanted to keep riding this high, you would try to take the trade at value to keep going up. Okay? That would be your entry setup to keep going up. Right here. But what happened above value in 2008? This is what happened. And this is going to be remarkable what I show you right now. This is what happened. Now you have your, on a trend, the uptrend, you have your evening star reversal. Look at this. Comes up and reverses, and it confirms right there on value. It confirms right there. Makes its high, confirmation candle red. Next thing you know, we melted. So let's keep in mind, two things happened before this. This happened above value, no confirmation. We got a higher one above value. That tells us we should be going bullish, right? Because it's made a higher high. You get the return of order. Okay, after it breaks structure, you get the return of order. You're supposed to buy, right? Well, this is a good buying area. But when you fail that buy, and we're on a 24-day moving average. This is a 24-day. And you have an actual evening star reversal that's pretty clean and confirmed. And you can expect some big bears coming in. You can expect the bears. And as you can see, ever since, they did nothing but drop, all the way to 2009. All right. Beginning of 2009, that's where it dropped. Why did the recovery take place? Or in this analysis, what would show you that the recovery took place? Well, I'm going to show you. What we're doing is looking for value. And I will label this as value. Like I said, I'll talk about value later, especially if you guys got questions on it. We'll definitely go over it. Well, look, price goes above value, right? You get your confirmation. You see that doji and your red confirmation. Comes back bearish all the way. Takes out this low. Takes out this low right here. Clean. Takes it out. But now we're below value. We should be looking to come back up to value, right? So you get your reversal signal here. You get your doji and your higher low with an upside down hammer, and it's confirmed on the next candle. Not only that, look what happens to the price. Price goes up, boom, and then does what? Come back to value. couple times. This is what I mean by you want to take the trade at value if you want to keep riding the trend. And now it goes up. All right. That's how it worked in 2009. That was the recovery part. Now let's show you right now what's happening. We're going to go to current day. And we're going to look for the similarities in what we saw in that. Man, this is scary. This is today. Well, over the last few months. You have your ultimate high here. I have value listed as right here. Now, unfortunately, this ultimate high gave us a nice reversal with a confirmation right here. Guys, this is real. It came back to value. Remember what we said about value. If you want to get your ultimate high and you want to catch the buy, you should catch it here, right? And take it up. Did it go up? It did for a little bit, but guess what happened? The same exact thing happened from 2008. The same exact thing. Let me look for the tool here again. I always lose this tool. I hate it. I need to put it in my favorites. All right. Why I can't? Oh, duh. It's inside of here. No, it's not. Oh, this is bad. I can never find this tool when I need it. Well, in any event, all right, here we go. All right, keep that over there. So let's just go back a little. We got our high. Price came to value. Next thing you know, we go up and catch this right here. This looks like 2008. Same exact setup. Where we hit value and we come up and guess what we got? A hammer bearish reversal with the confirmation candle right here. That's the confirmation red candle. This looks very, very troubling. When you compare it back to historical data, it looks troubling. It looks very resemblance of our history. So technically, I think that the highest this market can bounce back to, which it does tend to bounce due to the fact that they have to get their profits, okay? The buyers that came in, hold on, down at the bottom, these guys all have to get their profits, all right? So they don't want to take it when it slows down. They have to push the market back up and take their profits so they can actually maximize. And to be honest, this could be the highest potential spot that they can push it back to, which is back above value. And this is at 679.26. Okay, I kind of don't see that happening for a while. It possibly could, but I think ultimately we are headed down. There are levels down here that has been so clean and never been tested. I mean, there's a lot of money down here that hasn't been tested. Let's get rid of this. Here's our next value that hasn't even, it's just cleared it and kept going. You got to at least come back to value to make some type of sense of things. All right, for sure. And this value level is 589.80. Does this signal recession? No. But what does is those signals at the top of that value box where we are now, it just shows the same similarities from 2007 to 2008. I want you guys to pay close attention to this market in the next couple months. And please do not say you have not been warned. Other than that, thank you for coming through. I want you guys to subscribe to my channel. Keep up with this update. That's the only way you're going to find out if we prevailed on this prediction. What I'm doing in this stock market at this time, I am looking for puts and shorts on all the bull days. So there is some stocks I'm watching. I'll post a video about that. I'll give you one of them, which is Roku. Okay, check out Roku, and we'll see what's up. I'm glad you guys joined. Thank you guys, and see you.